Next, we discuss the general ledger. It is a principal books of accounts, classifying all the items in journal or grouping of all account. It is a summary device. It is also called the T account. It gives the cumulative effects. And posting. What is meant by posting is a process of transferring the business transaction from the books of original entry to the respective accounts in the ledger are called the posting. It is aimed to make, classified and summarize the business transaction in appropriate accounts. There are certain rules for posting, and separate accounts should be opened for each account. All preparing the transaction should be posted in the same account. Dual accept should be posted on the respective side of the accounts. There should be particular format for the ledger. Date column, particular column, journal folder and amount, then again date column, particular column, JF, amount, rupees. There should be two sides are there, debit side and credit side. According to that, we enter the transaction. What is meant by balancing of account? Asset training, the net balance, considering the two balance, comparing the total of both sides, balancing it put on the side which smaller and balance is carried forward, and balance is termed as debit or credit balance. There should be a relationship between the journal and ledger. The transactions are recorded in first of all in the journal, and then they are posted into ledger. Thus, journal is the books of first or original entry, while the ledger is the books of secondary entry. Journal record the transaction in a chronological order, while the ledger transactions are analytical in order. The journal is more reliable as compared to the ledger, since its books in which the entries are passed first of all. The process of recording transaction is termed as journalizing, while process of recording transaction in the ledger is called as the ledger. And next one is the balancing of account. This techniques of finding out the net balance of an account. After at the end of the period is a month or quarter or a year, by considering the total amount of both debit and credits appearing in the account is known as the balancing of account. The balance is put on the side of the account which is smaller, and reference is given that should be carried forward and carried out to the next period. On the other hand, in the next period, a reference is given to the opening balance has been brought forward and brought down for the previous period.